All right, another episode to go. Man, this volatility's been fun. Hopefully, everyone's been doing all right. It's definitely a trader's market. We've noticed that this randomness has produced something that we're used to trading was a 5 to 8 point range on Q and SPY. Now we're seeing like 10 and 15 point range, which is glorious for traders. Difficult for swing traders. There's still some stuff to be had out there, but the strategies might have to vary just a little bit to control risk because this market is just going to be wild. We're going to expect it through the whole presidency. But there's still going to be some gems to be had. For now, we'll kind of break into a couple of thematic things as well as I guess we don't want to necessarily call it the 500-pound gorilla in the room, but it could be the whole DeepSeek thing. So we'll break into that as well. For now, I'm taking advantage of some of the opportunities with volatility and trading a leveraged ETF in a wheel trade format. So I sold some $10 strike February 14th expiration puts in this thing. They went in the money and closed in the money last night. By some miracle, I was not assigned overnight. Kind of a bummer because I wanted the position, but I don't care because I sold those things for 90 cents a pop. Doesn't matter to me. My cost basis is 910, which it touched 912 yesterday. I would have been kind of, at my break even at that point, but ended up avoiding early assignment for now. Can I get assigned tonight? Sure, anything can happen. NVIDIA is pretty volatile lately. I'll break into the analysis on that in a moment, but my plan is I want to take a position down here because, well, it's at support. There's a support range here. It is present. And if we go to NVIDIA, that is about the 117 pivot. We did breach it yesterday briefly, but I kind of gravitated right back to it, and we're setting up a potential reversal in here. We have made a mean reversion of the entire trend if you combine the day before yesterday as well as today. Well, the day before yesterday would be Friday. We're right back in the middle. So here at that 119 pivot, 120 pivot, we're going to make a decision on whether we're going to test this liquidity zone or not. And the base of that is if you split this trend, that's right in the mean of the whole consolidation point here. Still looks a little bit like a bear flag to most of your pattern traders, but look a little further left and you realize, well, it's just edging out of a base of a mean reversion back in here if you can contribute this entire trend. It's about right, about 117. So pay attention to that area. If we consolidate here and start to melt up, the reversion trade target for a swing is potentially about 135, but we do have to keep a sharp eye on this DeepSeek thing and figure out where that goes. Anything I'm trading on NVIDIA directly is going to be probably at most debit spreads for risk because there is some downside risk here. But so far I've been able to keep treading water, and at the same time I'm looking to have a nice wheel trade position on NVDX because I can yield damn near 10% risk per dollar in a week. I love that idea. So pretty good stuff to go on. Well, that's where I'm at with swing trade stuff. We got a couple equities to get to a little later on as well. But for now, let's talk to Matt about some things that are going on. In all the dynamics that are attached to this. Some interesting stuff here.
Yeah, a lot going on. So I'll start with DeepSeek because you mentioned it. I think since it's come out, the thinking has been that $6 million number, which scared the crap out of everyone, is not a real number. That doesn't mean that this is not an issue. NVIDIA, the jury is out. I think right now the thinking is that it's neutral, maybe even net positive for NVIDIA. I think where I would worry is AI infrastructure, data centers, power. I think you still own those names, but don't get over your skis on those names. Palantir's earnings last night were interesting. The way they handled AI. Look for other potential surprises out there from other companies. In today's newsletter, I listed a couple possibles, but I mean, I think it's too early to tell, and I don't remember off the top of my head which they were. They're all companies I own, so I didn't really care that much. But I think Palantir's earnings report, how they're using I think could be a canary in the coal mine for some other things. So, watch that in other earnings.
Yeah, that was
The
quite the
big
run.
thing, oh yeah, yeah. I mean, it's one. It is now the top holding in guns, which is cool. Plus, I've always thought it was a defense theme, and it's also part of the AI. I mean, it's part of so many themes. There are some stocks out there that straddle so many of these powerful themes that I think they become must owns just because you don't even have to get all of the themes right. If you get one right, that stock can still run. And I think Palantir is in that in that discussion.
So it's like a net capture of the general themes in the market anyway. It's kind of in the middle
Well,
of
I
it
mean,
all.
you're getting so many different themes in there because they have their tentacles into so many different areas.
I guess the
Versus like, a data center
right,
that, if you can run AI with a lot less stuff, your data center's kind of screwed.
good point.
But Nvidia is one of those where, I mean, they're going to make money regardless of what happens versus a one trick pony. Palantir is not a one trick pony.
Right,
Google announcing earnings tonight. They're not a one trick pony.
right.
So that I also think is a must own. I don't buy things. I mean, I own it. I don't. I'm not going to add to it ahead of earnings, but I think that's another kind of must own company in there. Um, we'll see whether we've got some nice volume in the 2x GOOX today.
And Google's one that I'm currently long on with some far out of the money debit spreads to limit risk on. But it's set up like it could be the goat. I mean that
I
setup is
mean, it
just
could very
gorgeous.
well be. I mean, there's a chat room I'm in with some of like the top hedge fund managers in the UK, and they're all thinking Google's going to have a blowout.
It's,
Again, to me that's gambling. I'm not
it
going to add
is.
to my Google because of that, and I already own it. So I mean, if they have a blowout, good for me. And if they have a blowout, probably also they're going to announce, kind of what Meta did. Hey, we're spending, which is going to be good for all of my names. So
Right.
Google has a blowout. I probably have a good day tomorrow. I don't really need to do any more than that.
Yeah, it'd be ideal. I mean, I've got a target on it just from a technical analysis standpoint. I mean, this bull flag was beautiful. It did have the typical liquidity trap, which we also mapped out. I even made an example video out of this one, and it was just so clean. But now we're in the breakout of that liquidity trap, or where all the limit orders were taking profit to early in this situation. We've mapped it. We've crossed it twice. The conversation says bulls are likely to take over here. So it's pretty obvious that the targets were, half or whole MM, and I'm looking at like 210 for first target if this continues to run bullish. Up to the close today, I think is probably got a pretty good shot at hitting it. But blowout would be in the 225 realm, and possibly even higher if things get pretty psychotic here. This is only a 1-for-1 at that range, so I mean, gosh, a 1.5 or a 2-for-1 put some serious levels on that thing, and it's got that kind of potential for that kind of move, just outside of things. The other part of this is whenever I see the old cup and handle here on, and we have the one on the daily here, we got the handle a little early, just before the previous high, so this sets us up for a general trend move, which is very typical. It has a high probability in that sense of follow through. So we're just about at the primary target for the cup and handle primary break. Secondary full move can still take us all the way up to that 225 level pretty easily, in fact. So this is one of those potential moves. Worst case scenario, downside in the short term, if they say they really overspent or people are shocked by how much they've spent on this, Yeah, we could see it push back to 195. That is possible. That is risk. This is what you got to deal with when you're in a position. That's why I chose debit spreads, because if I lose it all, it's not a lot. But if I win big. I kind of like that concept. I don't know where I learned that one. Looking back, the other worst case
I'm a
scenario is
smart guy.
yeah, some guy. We revert that down to a half back on the previous trend. 180 is a good stable area. I'd love to own a long position there, but here it's like it's one of those. It's too high to chase this, and going into earnings, no one's going to risk that. That's what debit spreads are for. You're limiting your risk. It's capped. You have an advantage over the outright contracts in that respect, because the outrights are going to be much more affected by two things. Even if on the right side of the trade, the implied volatility crush can kill the outrights. With a spread, it's less likely because your short leg is going to also be killed by that. So it's a better net position to be in is debit spreads. That's my answer to every potential explosive move is debit spreads. Limit that risk. If you win a huge amount. If you lose, ain't no big deal. You lose a little. Everybody's got to lose once in a while. I'm okay with that. And then with the NVIDIA thing, I mean, I want to get back in that chart for a moment. It's where I dumb things sometimes. Bear with me. I hit NCDA somehow.
Yeah, it doesn't look like NVIDIA.
What the heck? I'm doing it 2 or 3 times here. Oh, this might be what my cat did to my keyboard. We're kind of in the middle. So, like, if you compare this to Google, we didn't have necessarily a blowout on earnings or anything like that, but we did have a pretty big hype event that pushed it up here. And now we're back to kind of playing in the middle. So, comparatively to Google, this is the chart that Google would be risking as far as downside. So, knowing where that is important. Look left, figure out where those key levels are, and you get a good sense of where risk should be. And also it helps you plan your trade so you can trade your plan. And this is one of those things where it gives you an example in the same space. I mean, Google and NVIDIA, kind of, tech giants. That's where we're at. So it gives you pretty much a roadmap for what to expect. And then comparatively, I mean, we have some really big alpha moves behind this. If you clock that all in and you start splitting the mean of consolidation, not saying NVIDIA is going to run up this, but this is just an example of potentially what Google could do. You get a massive measured move out of that. In the long run, NVIDIA here, owning it long here, and this is why I'm looking at wheel trading NVDX, is it's got potential to resume a very long-term bullish trend. This is going to take time. But we got levels here for a half MM at 155 after the base of this prime move here. Secondary outcome if it makes a full swing, 190s. Hello, and VDX would be a goat for that, especially if you're
Oh
selling
yeah.
premium on it. So I really love it. I know some others are doing the same thing with was it NVDL and a couple of the other ETFs on it, but I think and I like to take this calculation with wheel trading. I look at how much money am I going to lay out, and what is my average natural yield if I sell both calls and puts a month out, and I can use that to calculate whether or not I'm going to be interested in it. Natural yield monthly on NVDX is in excess of 20%, whereas I can net an average of 10% a week out on it, and I've been doing that. Even though I haven't had a assignment on my puts yet, I'm still in a position where I'm locked into a 10% gain either way on that instantly at the $10 area. So when you start weighing that out with your natural yield, and NVIDIA is a stock you want to own, it makes sense. Learn some wheel trade skills and start taking advantage of this volatility in the short term, selling to open options, generating income while you're riding a long-term trend. That's an investment vehicle that generates income. It's like renting out a prime property on the beach or something. So we had a couple other things going on thematically in the background, and
Oh yeah, it's tons of stuff. Uh, Next thing I want to kind of touch on is the tariffs,
yes,
and don't get caught up in the news, in the attacks. Understand art of the deal. So I don't know that Trump is necessarily wanting to have tariffs or the tariffs that are announced.
Right.
A lot of that is making deals like we saw with Canada and Mexico. The market's going to move on any little bit. His enemies are going to attack him. People are going to come out. Tariffs are inflationary. And yes, maybe, if they stay on, I mean, it's a nuanced question. It depends on what the tariffs are on, how long, all that stuff. Theoretically, all of this back and forth could get the Fed to pause. That could become an issue if that happens. But then again, remember, last year we came into the year expecting massive cuts and we didn't get them, and the market was still up big. So I wouldn't get lost in the noise of these tariffs. Be careful if you're day trading because the tariffs can,
Yeah,
you know,
they can spook you.
today, yeah, I mean, right now the market's up and, Trump could come out and say, hey, 35% tariff on the European Union and we reverse completely. If you're doing zero DTE stuff, you're
Yeah,
pretty much screwed.
you're gonna get
But,
wiped.
if you're a swing trader, if you're longer term, you've got to tune it out. I mean, there's really nothing else that you can do because you really have no idea what's going to happen.
The one thing we can take advantage of as traders, and yeah, you're always going to have that tweet risk, so we used to call it back in the first term. um, you can weigh out the range in those moves, so you can find the extremes relatively. So, like here, you can see I have some pretty wide liquidity zones mapped out on QQQ, and this morning we opened in a bullish sense to return to the previous high where everybody was chasing these into the after hours. They were buying contracts on the futures here. And I mapped that out as that's going to be a liquidity zone or a target for our opening move, and it was. And this point here, this 521.42 area, I usually try to make those in white, but that's a reversion between the extremes of the range. So once we crossed that threshold and we broke through all of these chased orders that ended up being limit orders on the institutional side typically, we were able to continue that move and make a measured move towards a reversion of from the halfway point to halfway to the liquidity zone. But if you range this whole area here where we had the tariff news come in, it's given back half. So the primary rule of trading is when you see a big impulsive move, right down to a 1 second chart, this happens, you're very likely to get half back immediately after. So if you looked at my Twitter feed over the weekend there, Sunday night and Monday morning, I called out a reversion target on Bitcoin, nailed it. And then later on, I followed up with QQQ. I said, is QQQ going to follow through and give half back like Bitcoin did? And sure enough, it did. It hit exactly our halfway target. Mine did waited till the close to hit my 521.40 target, but it did. Essentially, when you have these big impulsive moves, you can take advantage of them as a day trade, but there is still risk. So, like if you have two negative events in a row, that's where things get really out of hand, right? So knowing where those bases are if things do melt down is also important. And if we compress this 2-hour chart on Q, if this would have been a double negative event, you literally just stack a double measured move. And where does that take us? Back to previous support. Well, what's that look like on the daily chart? It's about half of our previous trend back. So you can map out areas of interest if this then that. You can play the events off and find the targets of those events. Or if you're smart, you're patient, and you wait for the repercussive move or the half back move. And that's what I love to kind of pound into people's heads. Don't get caught chasing the primary move. Trade the secondary move. That's the easy one. And that's where we are with wider breadth, wider range, bigger volatility, harder to trade for most day traders, even seasoned ones. But if you just relax and wait for that secondary move, your consistency gets to be insanely accurate. I mean, it's nuts. You look back at our history, we're holding that currently 94.5% accuracy rating over 300 and some odd episodes we've done of this. That's a milestone, but we're holding that accuracy point. Why? We look for the easy stuff, and it pops out to us. We take the relaxing trades and we nail them very consistently. So stick around. We got those. um, as far as the deep seek thing, I jokingly said, ignore the deep suck, just trade the chart.
Wait, the what?
Avoid the deep suck and just trade the chart.
Oh
And
yeah.
and I've been preaching that one forever. No matter what the news is, just trade the chart. The news only tells you what already happened. The chart's going to tell you what's likely to happen next. And that's why I keep saying, when you find those big impulse moves, they love giving half back. It's a high probability. If it's a double move or a double event move, weigh it out. It's just a measured move. And then you can wait patiently instead of chasing it like everyone else is. Wait patiently for the halfback, or wait patiently for the secondary impulse. Sometimes you get a positive move, consolidation, and an equal secondary positive move. That's the magic of my charting, why I'm always drawing boxes. I want to know the potential of that secondary move, and I just wait patiently for the break and trade it. And it goes to target very consistently, 94.6% of the time overall. Pretty good.
Yep.
That always makes me laugh because it's just, I make it sound so easy, and I know it's not. It's going to take you some time to build
But
that.
it is for you.
It can be. It just takes some screen time. You eventually get around to it. You're going to have some heart pounding moments to get there, but you'll get there.
Yep.
We got a couple to kind of reflect on as kind of
What,
co-beneficiaries.
one other thing before you reflect on the move, something I want to cover. There's something I did this morning. I mean, part of my normal process, but this morning it actually hit me, the ramifications of it.
Right.
So I use, GPT to help me build my portfolio, come up with allocations, themes, all that stuff. And it knows what's in my portfolio. It knows why. It knows me. It knows the themes I'm looking at. And, and I get research reports from brokerage firms every once in a while. And I'll copy the research reports. I'll put it into GPT and basically say, hey, you know me, you know my portfolio. Anything in here I should pay attention to. So this morning I put in a research report from Stifel, and and there's back and forth where it'll say, well, hey, for you, these are the important points. And I'm like, oh, tell me more about that. All right, tell me more. Basically, what it suggested to me was I switch out Micron, which I had no problem switching out. I've been looking for an excuse to get rid of that thing for a while.
Yeah.
For LITE, which I forget if that's Lumentum or something like that. And yeah, I mean, I didn't really think much of it, but then the ramifications of that, and I'm not saying that GPT is going to be right. I mean, Micron could go up 500% and Light could go bankrupt for all I know.
Right.
Nobody, I mean, no one knows. No one can make that call. But I've basically got the smartest analyst out there because it's got access to everything for $200 a month who can give me personalized portfolio advice tailored exactly to my portfolio, what I'm trying to do, my situation, completely and totally without bias. That's a game changer. And if I were, and I used to be, I mean, I was a stockbroker back in the internet age. And if you were just some normal investor, you knew the internet was big, you didn't know the technology, you weren't sure who were going to be the winners and losers, you had to rely on brokers. And most of the brokers knew less than the clients. They just knew how to sell.
Yep. They're
Now,
after that commission.
again, for $200 a month, what I have on my computer, just insane. And I do that every morning. And normally there's nothing. It's, yeah, I know, your position fine. This was like the first time in a while it said, hey, you may want to, get rid of Micron and buy Light. All right. So I wanted to bring that up because of how powerful that is.
And one of the things you said was kind of key to this. You get the back and forth. You get the in back and forth. You tend to see two sides of an argument, and one's biased one way, one's biased the other way. So I started drawing the wedge. I'm like, when you start seeing those, you can see them on a chart. You're literally seeing what the sentiment is. There's an argument here, it's bearish. There's an argument here, it's bullish. Now they're meeting in the middle. There's a halfback. See where I'm going with this? Eventually,
Yep.
that conversation comes to a conclusion at some point where a winner has to be found. So when you're analyzing things, it's the same. And your analysis on that chart versus the inverse analysis on that chart are going to influence the chart. So you're seeing it go both ways, and eventually the conversation comes to a point, and there's a winner. So when we map that out as traders, we can also take advantage of that. So if this consolidation breaks, we have our primary move. It's right here. Next fib target's right up here. Everything's in sequence. It forms literally psychological waves that happen on the chart while this discussion's happening. And traders can see that just by glancing at the chart with enough screen time. So I mean, here I can say, I like this in the short term. It looks like a good bullish setup if it breaks this level. Target's right up here. So I can comfortably say that on it, in spite of the instability in the market, we have good swing trades. And I kind of like this one. That target's pretty easy, $95. So I like this one. MU, let's have a look at that chart. And this is where, you're not the only one that AI is told that you might consider getting rid of it. So surely we see the same thing. We see a range, and it's starting into the compression side of it. But we've mapped this out before. What we found in liquidity, and it broke. So now we're in the bottom. We're potentially setting up a bear flag here. But what if that argument changes all of a sudden, and maybe the sentiment in the market or the theme in the market changes where MU might have a chance? Just map it out. It's a range. Where's halfback? $99. So if things are bullish, there's your map. If things are
And
bearish,
just so you know, GPT thinks long term
right?
they're going to be a winner. Short term, intermediate term, there could be some headwinds.
And that's
And and I've got plenty of semis. Like momentum is in in more of the photonics, which I did not have, which was also
right.
why that swap interested me.
And I can agree with that because it also shows the most potential or highest probability of remaining bullish when compared to MU. MU has kind of a 50-50 shot. That one's got more like a 70-30 shot in the short term of being bullish. Here with MU, I mean, downside risk, one measured move down from this consolidation. It's obvious right there, 74.85 pivot. That's an old pivot. That was easy to lay out from way back. So, I mean, you can weigh that analysis of AI against technical analysis, and suddenly you have a higher sense of certainty with probabilities in your technical analysis. This is what I'm saying. You can be able to combine them and produce some very good consistency that way. So that's the point. You have a tool that is invaluable, and you also have two ways of looking at things. I don't know that AI can analyze a technical analysis the same way we do in this just yet, but it will eventually learn. So where does that take us down the road? Even in the midterm, I mean, by about the middle of the year, it's a learning machine. Can it get there? Can it give us an absolute alpha at that point and find us a high percentage or higher consistency of winners? I think so. I think eventually it's going to get there. I got to wonder if AI is like crawling our data that we're putting out. You know what I mean? That influences it. It's a big world out there, guys, and everything kind of connects. So this is going to be some interesting times. In the short term, that volatility is going to be golden. I mean, I really want to have a red hat that says MVGA on it, make volatility great again. I would support
Mhm.
that. So if anybody wants to market that, take that idea and run with it. If you want to just give me a free hat, that's all I want from it.
Mhm.
But it's an idea nonetheless. And I think that we're going to see a lot of that in the near future. And you got instead of having like a the monkey, the ape, the elephant, you just you get a herd of big animals in the room. We're going to see some big moves, and all the influences in the market are just going to make great deals for traders. Also, opportunities for swing traders to take and capture bigger swing trade moves if they're smart and they can pay attention to sort of a combination of day trade price action analysis and swing trade analysis to maximize your potential for returns, and then add that to consistency. I think we're in for a good time this year. I really do. A couple others to reflect on. AI came up the other day. C3 AI.
Yeah, I've been sniffing around that one.
Same.
Haven't bought it.
I can't convince myself to buy it either, just as like any sort of swing trade for me. But I have been tracking it, and it's setting up like we're going to see a rounding here. So like I can kind of propose that we're likely to see the cup part of a cup and handle in this, and in that we got some pretty decent range. I mean that's a $20 range almost. So definitely don't take it off your radar, but definitely look left. Basic market structure is what we're dealing with now in the long term. And these consolidation points are all pretty evident. We haven't really revisited this previous all-time low here. There is downside risk to the mean of this range to about $25, so it's got potential for some large percentage moves. But it can also start to trend here. Just kind of watch for this key pivot here at about 48.50, that previous high. It's obvious where resistance would be in a market structure situation. So it's going to be a while before this one really starts to hit my radar, but I'm going to keep an eye on it in the meantime.
I'm keeping an eye on that. The other one I'm keeping an eye on is BBAI.
The ticker BBAI?
Yeah, and I wish instead of keeping an eye on it, I had bought it yesterday. But
Yeah. That's got a pretty good idea of breaking out to where the trend is started on your market structure moves here. It's got a few extra steps to the short squeezes in it. They're massive, but here's
yep,
where we expect the trend. Reversion target, just kind of eyeballing the halfway. You know what? Let's draw that. I rarely include wicks, but I will with this one. Just to get the reversion target, draw your box top to bottom, split the difference. It's right about here. About $8.40 is the mean reversion on that one. That's got potential. Um, give this trend a little bit of a chance to consolidate, and we'll see if we get a nice clean move out of that. And then to boot, I mean, you can kind of respectfully, if you include this low and split that mean, it's about a 1.5 move up from here. This one makes sense. Let this consolidation break, and we got potential for a half and whole measure move out of this. Good eye
yep.
on this one. Me likey. That's jived a little bit, but it's close enough. Trust me. About 575 for a half M target, full M target up here at about 733. And then where does that put us in the market? Aha, liquidity zone, top half of that basically out of this wick. So that previous short squeeze is going to be where a lot of the bag holders are going to be. There'll be some limit orders trying to take profit off around that area. So a little bit above a half measured move, start looking for some liquidity in there. That's pretty obvious. But yeah, that's a pretty good setup for market structure moves. Another one I kind of kept an eye on was snow. Kind of the same thing, market structure.
Snow I own, so that yeah.
And then snow is just about at a half M. I mean, it's getting close. There's a liquidity zone here that's key. we're slowly oozing through now, but I think today we got potential to start seeing some progress in that going into next week. When's their earnings? Aha, the 26th. This could be a run up to earnings. Short-term target on this would be pretty obvious. Dang, I got to compress the hell out of that chart. Primary move was obvious here. Half a move right here, about $200. That's a round number. Pay attention to those. People will start to get nervous holding it longer there. Certainly, they'll be nervous about buying it there. So if we break that 200 mark, sure, we could blow out and shoot a full MM to like 120 or 227 here pretty easily. So kind of mark that in your chart, if you will, about the half and whole rule here. Ah, nice moves. I'm still patting myself on the back for that one I called out last week where I made a demonstration video. I showed the measured move and it nailed both targets less than 24 hours later. That happens. I love showing people how to do that though. It's a blast. Really just taking some very basic chart analysis in an advanced way. So I'm calling it advanced analysis strategies, but it makes it look so easy when you get there. Learn the hard stuff first, then go after the easy stuff, and then your consistency and probability goes up as a trader. It's really a neat thing to progress to that. I've been doing this for years, not as long as many others. I started like at the end of 2017, but I caught on quick. I'm a fast learner.
I started in 1982, so
Yeah, many decades on me. But now, mind you, I did some investing back in the early 2000s. You know, the whole basically I invested in people who were manufacturing ammo, just a long-term thing. Bought some shares and did well with that. But you know, that was probably my first trade ever. But I didn't really start doing it in an active fashion until about the end of 2017. But I studied a hell of a lot before I took my first trade in that. Believe me. One you mentioned last week, I always say Pan West, but it's Palo Alto, P-A-N-W. That one met our target for the liquidity zone move, but it backed off real quick into this descending channel.
yeah, I'm not in any of the cybersecurity names at the moment.
Yeah, I wouldn't
This looks
either.
more like a short than anything else to me right now.
Great minds. I was thinking the same thing. But a cautious short because it's already threatened to tap at that halfback, and then the 20 period daily is right there where we settled. So I wouldn't short it now, but if you did short it, you're doing good. Probably look at maybe taking some profit here, maybe leave a runner on to finish that move to like 177. But yeah, it was a good short. But it can go a lot lower. We could see this thing right at the bottom to like 167 pretty easily. So be cautious on this one, or be nimble, as I would say, with PANW. Another, I guess, do we call it a gorilla? Microsoft? It's been kind of sketchy lately, and I just lost interest in the chart when we started seeing all this garbage. But it's starting to play a little more well with trend lines, and we did have that wedge break, and eventually this measured move kind of fell on us. But is it gonna give half back? I mean, the earnings are also, you know, hmm.
Yeah, so
I
I
don't know.
think again, not talking shorter term. I think this is a must own. They span all different aspects of of everything in AI.
Right.
Does this look more like a short than a long to me? Yeah. And I mean, if I were trading this short term, this is not the type of messy chart I like to see.
Same. I kind of lost interest in it when it became that messy. Although
Yeah, I don't blame you at all.
it is what we'd call a net beneficiary to AI and even, you know, the quantum computing, dare I say it. But let's wait and see. This is going to be a less interesting chart until it isn't. So we'll keep an eye on it. But
Right.
it's in that range where we don't like to trade it here. It's just not interesting. Um, one that we did like to trade, Crowd, CRWD, CrowdStrike. Oh baby. We're in the process of breaking above our previous high. That was the previous 86.6 fib level I talked about, and we plotted the measure move on this thing beautifully. We're above half now. We're reaching out a point where if we start breaking above the 415 area, we got a pretty good shot at shooting that 440. That's a pretty big ass move, guys. Um, definitely don't ignore this one. This thing is definitely got some weight to swing around, and yes, the chart is very well, parabolic and a little bit nervous for people buying it here, but they are. So this is going to be an interesting move here. Um, earnings was back here. It didn't really do anything for earnings. It just sort of consumed it or consolidated it around that center. And this is where the breakout is starting to take effect on this thing. Can it go into super parabolic mode on the monthly chart? Well, yeah, that target's pretty obvious there. Those candles are really compressed. But this is the one to watch. This is our range. And this is the one when we break it above half, it shoots right to the 3/4 mark on our measured move target. So 415 is going to be your key area to really keep an eye on if this thing keeps moving. If people start to buy it there, yeah, we're going to get a hellacious bullish move out of this thing. But if they start to fall off there and you start to see too much consolidation with too many big wicks on the candle, so to speak, in that area, be careful. Step back and wait on that one. But in the short term, it's still pretty damn bullish. The other thing you looked at last week, I fell out of interest with it, but it was still something I want to watch long term. Is that AMSL or ASML?
Yeah.
I mean,
I'm
it's got the potential. We're above the mean on that double bottom we were looking at, as sketchy as it looked. Kind of hitting resistance today, but still has potential to follow through and push that R1 where we developed a liquidity zone anyway. Pretty fair chance of hitting the 760s from here, but probability wise, it's probably going to be choppy first. See, we opened yesterday right at that key pivot here, and we started making headway, and all of a sudden we hit the daily 20 and rejected. If this closes inverted hammer here, look out. We're going to probably wedge out from here. So we'll get an angular here and an angular here, possibly tap this as a support area. Typically, when I say, look at high, low, mean, and we break above it like this, if we can't quite hit the high, we tend to test the mean as support, which we did here, and we did find it. But when we test it twice, we end up with a wedge. Wedges have that 60-40 rule. Sometimes they follow through 60% of the times. Sometimes they fail 40% of the time. It's just, you got to weigh your risk on that. Wait for that to happen, catch the break afterwards, and don't fall for a liquidity trap. That wedge is pretty well established here. We have the wave 2 present. If I was to just kind of eyeball the drawing on this thing, there's your angular. And let's see, secondary impulse. I'm going to grab the upper half of it here, about where my eyeball sees the regression line. Watch for a liquidity trap in this area. If you start seeing some wicks in here, and there could be some sellers in here, that's where things are going to get bearish and come back and test the support of that wedge. So pay attention. This one's going to be eventually interesting, but that's some choppy, ticky-tacky stuff to chase. Don't get caught on the wrong side of this. Definitely stay nimble in the short term, but the long term could set up a pretty nice move. So don't ignore it. Don't chase it either. Just be patient with that one. Amazon, dude. Years ago, we used to say, between Putin and Amazon, who would rule the world? We were betting on Bezos. But, yeah, man, now that's been parabolic for a long time. Are we threatening a pullback on Amazon, or is it just going to keep on crushing?
again, that's longer term, it's a must own. I wouldn't be buying it up here,
Me
but
neither.
I also wouldn't be selling it up here.
And I did draw a liquidity trap on this one, and it did reject the top of that liquidity trap today. So if it does sell off here, expect to move back to test support here. Pretty obvious.
I forget they've got to have earnings coming up soon.
I bet they do. Yeah, here we are on the 6th. So yeah, 2 days.
Yeah, so
That
I
could get
think you get a
interesting
lot better clarity out of them.
after the fact.
Yeah.
Makes sense. There is a play here. If it has a nice blowout, 252 is the, I think that was the half measured move target. Yeah, we're talking about here. Um, Psychotic blowout. If it goes really nuts in the earnings call, sure, 275. But man, that's a hell of a lot. You got to realize that when cost of goods go up, the percentage of the yield stays the same on profit margins, but that yield is of a bigger number. So plays out to where, yeah, as prices have gone up, Amazon's margin went up in the same percentile, but bigger numbers. Every time I look at like the price of eggs hitting $4.13 the other day, and I see Amazon doing this, and I know prices are in the short term, at least while Trump's ripping the band-aid off this thing and getting some big things in motion, setting up the art of the deal.
Yep.
I almost see that as an opportunity where I always look at Shopify. I just do. I haven't looked at it today, but let's look at it now. And yeah, we can see advantages when prices start going up. People start looking for bargains, and Shopify is where you look for bargains as far as this heavyweight goes. Can we see a massive 2-for-1 move on that? Well, earnings is on the 11th, and we are, as rough as this chart is, in the handle area of a cup and handle. God, it's the ugliest cup and handle I've ever seen in my life. But if it's consolidation, which it is, we got potential for a massive measured move on this thing. I'm going to split the difference. I always do. And stack a block in here. Potentially, it gives us great price targets should it break accumulation. And we've got some pretty good range on this guy, so to speak. I'm always saying, let everybody else chase the primary move, catch the secondary move. That's where your probabilities lie and your consistency is. Short-term target, probably an earnings melt up to about 125 and some change here. And then if we get a blowout, well, we know the limit is about 140, 141. Pretty obvious moves here. Let this be a little bit of a nimble time, though. Going into earnings, you're going to see some volatility. If you're wheeling this, if you got that capital, you're going to be able to capture some serious premium here, sure. There isn't a non-existent downside risk here, and that is about the middle of this consolidation. So if it pops up, it usually gives half back. You get the idea. So be nimble with this one if you're going to try and mess with it into earnings, but it's got pretty good potential of following through a break and running for a reversion at least, or a half measured move in this current move. Let it break resistance first. So about 120.50 is resistance target for this guy in the short term, and if we can melt that, pretty good shot. Also, recognize that big range move here. It did give half back of that previous line there. It can wedge out if this ends up being a nothing burger earnings move. Take advantage of knowing where your liquidity trap would be. So it'd be about just eyeballing it, about 123.75 would be where a liquidity trap would be if it broke out of this angle right here. So be nimble. But Shopify is a great trading stock. I've scalped the crap out of that thing, and it's great. Any others to mention?
One thing I would look at is uranium.
Yeah.
Look at CCJ and look at UEC. So, and I wrote about this in the heat formula this morning. What I didn't know, because I really didn't care, is that the U.S. imports most of its uranium,
Right.
and a lot. And I don't remember the percentage. I think I have an article in there that gives you a lot comes from Canada. And so I asked, who are going to be the winners and the losers? And the winner, and I forget why, but it's in there, I think, is UEC. And the loser is CCJ. So interestingly, if you look at the UEC chart, yesterday it opened down big, closed in the middle of the range.
Right.
And, today it's up nice. The CCJ chart, CCJ got its ass kicked, but has now come back and undercut and rallied the 200 day. So just, something interesting there. I like, I own it, so I'm not going to buy any more of it, but I like CCJ here.
I kind of like it here too. I mean, it is the average high-low mean reading on a potential pretty beautiful double bottom here. Actually, we're above the mean, shooting for the high range, possibly the fib range, which is where that previous MM target is anyway. So yeah, if we melt above $50, $51, we could see this thing take off and run for first half back of the previous trend. So short-term target about 53 to 53.50 in here, just eyeballing the mean. And if things get really good, we could shoot the old 86.6 fib up here, 56.25, and then there's that liquidity zone where we were looking at for the green zone. That was just a matter of if we had the primary break, this was the liquidity area where we'd like to see this whole move play out up here. So if we melt this after this, we could see some serious bullishness. But in the meantime, you got the tariff stuff happening. Like it or not, we need uranium. Tariff or not, it's going to be a margin issue. Whereas any retailer, even uranium retailers, percentage focus is typically fixed. But when the number's bigger, that percentage yields a bigger number. So think about that. That could be a good boon. And I did use, what was it? Damn it, UEC. So many tickers in my brain. I've got to spill some every now and then. I did use that as an example for a potential measured move, and we started kind of melting up to hitting the breakout, but then we started the whole tariff thing just knocked it right down to support, and the downside risk is always kind of in that support range. Notice it tapped that 200 and printed a nice fatty doji there. I do like UEC to be bullish as well, so this could be a pretty good opportunity. And if it's lifted, it's a pretty obvious measured move. I didn't put the midpoint in here. About 970 for a halfie. I like it. We got potential for growth on either of those.
Yes, we do.
Chart it fast. Be nimble, guys. Also, I don't have to point it out, but there's a nice clean diamond pattern here, and those usually precede volatility. And since we got the tariff news, and I don't know what was the real catalyst for this fallback, but when diamonds break, they move in channels. And I'll just put the upside channel into this real quick here before we go, because we're running out of time. It's just a parallelogram that you got to draw on these. So the bull channel would take us in something like this, and we could see this kind of range around in this channel and hit these levels and bounce around. But the most important part is knowing where the short-term sentiment is going to be. Just use a regression line, the center line of that channel. You know, above it, likely to hit the top. Below it, likely to hit the bottom and test. So this could print a nice clean trend out of this in this maneuver. Worst case scenario, we give half back. If it breaks down and fails, well, we know where support is, about 6 1/4. I haven't looked at Lightbridge in a while. We can look at that real quick. That was one of our highest percentage yielding callouts ever, I think.
Oh, so far, so good. Looks like it wants that Jan high.
Well, it did give us a wedge break. Eyeballing liquidity trap would be about probably $10. If it's going to pull back here, it will pull back at $10 and then give a test to $9. But long term, if this thing gets exciting, it's got quite the measured move in it still. And we could see a 1250 push after a half break here of about 1065. So keep an eye on this thing. This thing was a dog for a long time after I first day traded it way back in like 2018. Dude, this thing's got some. Where's 2018? Yeah. This thing's got potential to be a huge market structure move. And I think it's a lot bigger than we might see. I don't think there's going to be these numbers here, but this is after probably a couple reverse splits. As I recall, there were a couple. But you get into potential market moves on this thing, and reversion targets start to make sense. I need to catch myself for a moment here. The size of this range here, we're above the mean, so we're likely to test the fib level. And I would say market structure resistance is all the way up here. So if we start seeing this thing really cook off, we could see some serious plays on this thing in the future. So yeah, that thing could really cook. I might just start. I wish it was better liquidity, but I think we could make some income plays on this thing eventually. Right on. Well, keep an eye on things, and again, guys, be nimble in this market. It's going to be humbling to a lot of people in the short term. Typically, in the beginning of a Trump, as we've experienced one before, a Trump administration, you get some wild rides, but eventually you'll catch on and be able to make sense of it. And if you just apply yourself with looking for those higher potential moves to keep your consistency up there and stop swinging for the fences, swing for those base hits, you'll be able to make some pretty decent returns in this market condition. You just got to be spry. You got to be nimble and ready to jump at the drop of a hat or the drop of a tweet. So be prepared, guys. It's going to be exciting. I think that's about a wrap, man. And we have the webinar version of this show coming up on Thursday. We're still kind of playing with that to figure out the best way forward on that, but it's looking pretty good. We're getting some attendance on it, and I think potentially that's going to be a great thing to spin off of our watch list show here.
Yep.
I like the future. The future's looking good for a lot of things, and this is I gotta say, man, this has been a beautiful friendship, sir. This is really killing it.
I appreciate you as well.
Right on, man. Well, thanks again. We'll see you guys on Thursday. And if there's anything that comes up in between, keep an eye on that mailer. In fact, I have a link in the description to where you can sign up for the Heat mailer. Get on that email list because there's a lot of great insights in there. You know, this guy isn't just a retail trader like us. He's a big deal. Pay attention to him. He says a lot of good things in that, and you can really pick up some edge there. So thanks again, guys.
Keep an eye on this market right now. It's starting to weaken.
Should we take a quick peek
Head
at the
on the
cues?
swivel.
I got 2 minutes. 2 minutes to trade. All right. We're looking for a support test back to that 521.40 pivot. We might be pending news here. I think there was a Fed speaker at 11 that might be done with. I don't remember where that news feed went. I wonder if there's something he said that people didn't like. Who knows?
Very well be.
I almost never listen to those. I just watch the chart. Chart tells me everything I need to know.
Yeah, totally.
But there's a big gleaming diamond pattern between yesterday and today, if you notice this. We were looking at a possible push to that 526.60 area on Q. That's a previous conversation area. It's about a quarter move all the way to our liquidity zone up here. But we could start to wedge out here. You know, we've already seen first, second, and third wave in this. That's one hell of a big wedge, dude. Liquidity trap would be in this area if you were drawing an angular here. Things are about to get exciting, guys. Next few days here, we're going to see something.
And the market is weakening as we speak. We will see. Never a dull day.
Never. I'm going to have to get back into trading NQ a bit before I go eat something, and that's a bad idea. My brain's starting to fade, so I got to be careful. Wow, so I was just catching a note here on our YouTube feed here. We're also parallel broadcasting this on the Quasar Markets Network, and currently 186 viewers watching our stream. Awesome, thanks guys. Appreciate the support.
Cool.
So we're getting some numbers out there. We're starting to get attention. I think we're gonna finally show more people what we do here, and telling you go back test us. We're holding that accuracy rating on our call outs, guys. Our consistency is on point. Please tell your friends because they need to see this. Thanks, guys. We'll see you again.